We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Keith Neumeyer, President and CEO of First Majestic Silver. Keith, thanks for joining me today.
Hey, Tom. Great to see you as well.
So part of your story of starting First Majestic was doing a supply-demand fundamental analysis on silver and choosing it as the strategic metal to focus on. So could you share with us some of the numbers of the silver market that are most surprising to people?
Yeah, thanks, Tom. It's interesting because I came from a copper company and I founded it back in 92 and then left that company in 2000. I was looking around for what to do next, and I was seriously considering starting a gold company. But I fell on silver, and I guess my head's wrapped around copper, supply demand fundamentals. I looked at silver, and it was just amazing to me of the dynamics in the market and how tight the market actually is. And that's why I put together First Majestic Silver. Mm-hmm. I predicted $50 silver previously, and it happened, obviously. I think I'm a triple-digit silver guy due to the fact that the miners worldwide are producing only 750 million ounces of silver last year. That's down from 880 million ounces back in 2015. Mm-hmm. So we've had 4 consecutive years of declining silver mining supply, and consumption has been relatively flat, about 1 billion ounces. So you've got a deficit there of somewhere between 200 and 250 million ounces every single year, going back a couple of decades.
So how much silver is traded in the futures markets per day versus what is mined per year? And what are the ratios of mining gold to silver versus the current price ratios?
Right. Okay. Well, thanks. The mining ratio would be 8-1, which is pretty shocking, right? So for every 1 ounce of gold the world is producing, the miners are producing only 8 ounces of silver, which is pretty shocking when you consider that the theory is that there's about 16-1 silver to gold in the Earth's crust. But yeah, we're only mining half of that amount. So maybe the original theories of silver itself are actually not correct. Maybe silver is much rarer than actually even the scientist thinks it is. So, we've got above ground supplies dropping like crazy and demand, I think, going up. So I think it's a perfect storm.
So considering the cost of production and the utility of silver, is that how you come about the, let's say, triple-digit price forecast?
Well, not really, because you have to pick your gold price. So it's ratio driven. Mm-hmm. So right now we're at 70-1, approximately 70-1, and we're mining 8-1. So in theory, we should, at least in my opinion, and this is why I come up with my view on triple digit silver, is just divide the gold price by 8 and come up with your silver price. Mm-hmm. Even do it conservatively, well, divide it by 10. Even if you divide it by 20, the last ratio hit 31 in April 2011. And then, of course, it went all the way back up. I think next time we see ratio collapse, I think it's going to break through 30 quite easily. And we don't know what number it's going to be. I don't have a crystal ball, but it's going to be some number less than the last low we saw back in 2011.
Mm-hmm. So how offset has demand been for the last year versus what is being produced annually, Keith? Have we ever seen such a high investment demand along with industrial demand that's only projected to grow?
It's interesting because, when I put this company together back in 2002, I always thought it would be the industrial buyer that's going to ultimately move price, because I'm looking at the, electrification, computerization, automation, of the planet over the next multi-decades. And so there's a huge macro story about the needs of silver and copper. So that's kind of where my thesis started. And from there, it's just complete supply demand fundamentals. If you just simply, as I said earlier, you're in a deficit of somewhere 250 million ounces a year, and call half of that coming from recycling, which is probably not even close to half at this point. So where's all the silver coming? It's coming from above ground hoards. And these above ground hoards are getting smaller and smaller and smaller. And I felt that the Panasonics or the Toyotas or the Teslas or the Apples of the world would just all of a sudden couldn't produce a product anymore because they'd run out of the metal. Mm-hmm. And that could, I guess, still happen. But what's happened recently is the fact that we've now got a whole group of investors coming into this space, gobbling up ounces, and it's starting to, in my opinion, disrupt the market. because, when you have such a tight market as silver is, and you have a buyer of, call it 50 million ounces of silver, which is really only slightly less than 10% of the world supply. Even if you have a 100 million ounce buyer, right? Now you're talking about 12, 13% of the world's supply. And that type of additional buyer in such a small, tiny, tight market like silver can just make the price explode. So I'm believing today quite differently than before. I think the retail buyer is going to be the driver of prices going forward.
Mm-hmm. And I think it's interesting how you mentioned the industrial demand, right? And as most of our listeners think the bullion banks are responsible for depressing the silver price, you have another factor that contributes to this that I found interesting, that the industrial consumers, as you say, of the metal are not wanting to let people know how much they use. So can you share with us that dynamic?
Mm-hmm. And I've asked them, believe me, and they are quite paranoid. I think this goes to the same reason, because these markets are small markets. You look at all the critical components that go into all these great little devices that we rely on, rare earths and silver and, copper and all the stuff like that. There's just really not enough metal out there, and these consumers are starting to figure it out. So now they're reaching out to mining companies. We've seen little, tidbits here and there of that happening, right? And then, that shows you that they're seeing, in the future, that there's going to be this huge supply deficit. And that's why they keep these numbers so tight, because the last thing they want, look at cobalt, or I think it's chromium or something. It's gone up from 3,000 to 20,000 just in the last, few months. Those are the kinds of moves I think we're going to see in, other more broader metals.
Mm-hmm. So as we've seen in this past month, there was a big push and demand to really, gobble up these retail ounces. So what is happening from your perspective with the silver squeeze? And do you think it's going to continue with the, let's say, the momentum that it's had in the last month here?
Well, once you get the human brain imagining stuff, you can't stop it. You can't go back in time and turn back the clock. The genie's out of the bottle. Mm-hmm. So, what happened was, due to the internet, we just educated an entire generation in a very, very short period of time, which is, any mining company, any silver company couldn't have accomplished that, through 20, 30 years of public relations campaign. So I'm thrilled the fact that now we all of a sudden have this, younger generation, this group of millennials now looking at this space. What they decide to do is totally up to them, of course, but it's now put a, whole set of new eyeballs on silver, the importance of silver, mining companies and so on and so forth. And I'm encouraged. I think it's, what happened to the stock over a very short period of time, and people get hurt in those types of moves, which is unfortunate. But, the silver prices and our stock went pretty crazy, and it was, I suppose, good for some people.
Mm-hmm. So as you're talking about the shares of First Majestic, there was at one point quite a big short interest on First Majestic. How do you see that and the liquidity that you guys have in the market?
Well, I think that's why the short position actually exists, is because of the liquidity. Mm-hmm. Our stock trades virtually its entire issued and outstanding shares every quarter. And sometimes it actually trades 2 to 3 times the company's issued and outstanding shares every quarter, which is pretty phenomenal, liquidity. And then the institutions love it. I think, and the options traders love it. So it is what it is. And, that short position has been there for, over a decade. It fluctuates. It's probably a hedge against, maybe someone's gone short First Majestic and gone long silver price, or bought another long stock and shorted us. Who knows, right? Mm-hmm. But it just adds to the liquidity. And, you're right. The Reddit crowd identified us as the highest short stock in the sector. And also our symbol AG, I think, helped, because it was the periodic table symbol, right? Mm-hmm. So I think that helped. And, I remember seeing the Reddit post that night. I think it was a Wednesday night. And it said, we're going to push silver to $1,000 an ounce. I'm going, what the heck? Who are these guys? But anyway, it was pretty funny.
Absolutely. So Keith, how does this month of price action compare to, action that you've seen in the past? You've been in this space for a long time, and maybe share with us also what you think happens after a correction like this.
Yeah, I've been through some pretty hefty corrections. I was on the floor of the Vancouver Stock Exchange in 1987 when the Dow dropped 25% in a single day. And mind you, the next day when I went back to work, I made more money that one day on the bounce than I ever had made previously on any single day. But nevertheless, I think the closest is really the 1999, 2000 dot-com bubble, where things were just so frothy. You could raise quite a large amount of money just on a piece of paper on a little, shoddy business plan. People were just throwing money around. And now in this whole SPAC market in the United States, that reminds me of a lot of that kind of excess that we saw, in the NASDAQ bubble where you just had nothing going public, right? Mm-hmm. They're trading shares just for ideas. And that's what SPACs are basically. So I think that we're getting close, to some kind of serious correction. And I don't think it's going to be particularly good when it happens. It may be short-lived, but if you look at what happened in 2000, when the NASDAQ hit 5,000 in March of 2000, it dropped 80% over the next 3 years. And it wasn't until 2015 that it actually hit a new high. So it took, I think, 13 years, I believe it is, or 12 years for it to go back up to its old high. Now, of course, it's gone up much more after that, but I think that's the type of correction we're going to see.
So in that type of environment, Keith, how do you see the gold and silver junior miners holding up? And how do you, let's say, build a strategy around that, going forward, having that, let's say, type of correction in mind?
Well, it's a style of investing for one. When you decide on buying a particular stock, you have to have your areas that you're comfortable buying it. And before you even buy it, you have to tell yourself where you're comfortable selling it, right? And it'll depend on the stock, it'll depend on the size of your position that you take. It might depend on, where in the business cycle this particular company is. It may dictate how long you're going to own it. So all those types of things you have to frame up, before you take a new position. And then these markets are very volatile. And when they rally, you have your sell points and you sell a little bit on the way up. And I'm very disciplined doing that kind of thing because all these stocks go back down again. And it could happen in the case of a crash that I suggest I think will happen. Yeah, the miners could get affected. Mm-hmm. But if you properly trade your portfolio, keeping a core position and taking advantages of the highs and the lows, over a period of a couple of years, you could end up with a reasonable position and at a reasonable cost. And if you're right in your investment, maybe one of these days you'll get a 300 or 500% rally on it.
Mm-hmm. So Keith, can you share with us a little bit about how you think about investing in the space and maybe the importance of the board owning stock in the company or having skin in the game?
Well, for sure. One of the first things I do when I look, I'm just talking about, investing in a company and how I do it. But one of the things you do before you actually buy any stock, is you go look at the management circular. And these management circulars are available on the internet. And you read them, and it's shocking to me how often I see that the boards of directors or senior management doesn't own any stock. And right then, if that's the case, then I won't bother even investing in the company because what's the point if the insiders don't own any stock? I want to see chunky positions. I want to see management with chunky positions that they've actually paid money for, not free stock. And I want to see them have a skin in the game. That's very, very important. And then once you get through that, then of course, then you can decide on how to invest in what type of sizing, because everyone's got their own thresholds, and investing in the mining space is pretty treacherous territory, only meant for the brave, I suppose. So you have to be nimble. But anyways, hopefully I answered your question, Tom.
Absolutely. So Keith, what are some of your favorite, let's say, examples of companies that exhibit this type of behavior and maybe your favorite ways to play this next move in the juniors?
I like to get into stocks when no one wants them, because I find that people get negative on something or they, whatever. You might have a big seller in the market that's driving the stock down, and you never, or it could just be sentiment towards that one company, which is often the better thing because, you've got the street thinking this one company may have poor management or may have some distressed issue. And if you think otherwise, you could trade against that, right? So you try to do some education, due diligence, and find these stocks that are, on sale. And, I've got tons of examples, but one example, Victory, you probably know that one, Victory Metals.
Mm-hmm.
They're acquiring a company called Nevada King, which I'm a shareholder of Nevada King. So what happens in the market, and these things take so long, it takes 90 to 120 days to pull off a merger like this. And then during that window of time is the best time to be buying it, assuming you expect the deal to close, because a deal like that creates uncertainty and it creates selling.
Mm-hmm.
And then for a guy like me who's a contrarian, that's one of those perfect trades that you could do, right? So.
Sure, absolutely. So what are some of the, let's say, up and coming juniors that you are looking at in this environment going forward in 2021 here, Keith?
As I said earlier in the discussion today, Tom, was that I like buying stuff that is for sale. Like if it's just for whatever reason, and even in a bull market, as we're having right now and in the silver and gold space, there's bargains out there, mm-hmm. which is quite surprising considering, we have still, north of $1,700 gold. We've got, $25, $26 silver. These are, decent prices for the mining sector and very healthy for the mining sector. Yet for whatever reason, investors are continually chase, the favorite story stock of the day. So I think the picks that I pick are, as I said, they're for sale. And one I've already mentioned was, Victory Gold, which I think you're well aware of, Tom. A company like Nano One, this is a company I bought years ago. They're into the battery technology space. Mm-hmm. It's performed quite well lately. I wouldn't necessarily chase it, but if they do a deal with one of the auto manufacturers, which I think they're going to, I think that company is going to look quite interesting. Another one, Snowline Gold, SGD, it just went out public. I think a lot of the investors that are in it, Tom. We had Paul Majestic, myself, Eric Sprott, a number of others put some significant money into the company. And Yukon-based gold exploration company just gone public. I think it's only been traded for 10 days or something like that. So it's brand new. Mm-hmm. But of course, Silver One, another company that I helped fund and helped bring public. It's about 5 years ago, similar to what I helped with Snowline Gold. But Silver One's, drilling right now in Nevada, place becoming my favorite place to be. And, I think people should definitely look at Silver One. And of course, there's two companies, First Mining Gold, chairman of that company. And then, of course, my full-time job, First Majestic Silver.
Mm-hmm. And of course, those are all companies, as we talked about, that are based around all-star teams and all-star boards, right?
That's where it always starts. You got to go to the people first, because good people don't generally make too many bad mistakes. Mm-hmm. They'll make the odd mistake, but they're not going to make too many bad mistakes. So your odds right then are now in your favor versus just buying some random name that you don't know the people involved, because it's such a speculative industry and such a difficult industry to invest in and actually walk away with a profit. You've got to at least have as much of those boxes checked off in your favor as possible. And one of those would be shareholdings. So, the board and the officers need to own stock. And then you need, the right people involved that are going to make those business decisions.
Mm-hmm. Yeah, it makes me think the old adage from real estate of location, location, location. Maybe we could say in the mining space, it's people, people, location.
Yes, I would agree.
Mm-hmm. So as we're speaking about, let's say, Nevada, mm-hmm. I want to kind of get your thoughts on how you think about continually trying to expand your resources as a mining company. We know that you're always depleting your resource when you're mining it. So what is your strategy to try and replace those ounces? Do you spend money as a company on exploration or trying to identify takeover targets? And maybe is your recent acquisition of Jarrett Canyon an example of this?
Jarrett Canyon. Okay. So building the business through M&A and all that. It's something that, I spend an enormous amount of time thinking about. Mm-hmm. I'm not a geologist. I'm not an engineer. I'm a finance guy, right? So when I look at stuff, I look at it from very much financial view, right? Mm-hmm. So, supply demand fundamentals for silver, fantastic, right? I can crunch those numbers, right? So I have a sense that silver prices are going to go higher over time, but also have to look at political risk, geographic risk, and the company was very much focused in one country. And I'm saying nothing bad about Mexico. I think it's a fantastic place to be as a mining company. But, we started looking outside of Mexico a couple of years ago. Mm-hmm. And this particular mine, it was so compelling to us that It gave us 30% increase in overall production on a revenue basis, and we sold 12% of the company for accomplishing it. So it's a pretty good growth story. We think we can actually expand it to higher levels than it's currently producing. So, and it's a huge land package right in the middle of one of the best, jurisdictions there is in the world. So we're happy to be, part of Nevada now.
Mm-hmm. So, Keith, how do you think about building, let's say, strategic partnerships with the right kind of investors in your company? In another discussion that I recently had with a mining director and board member of several companies, he highlighted the importance of this. So I was wondering how you think about developing those relationships and how you go about it.
Well, when you're active in any jurisdiction, First Majestic's been in business for 19 years now. And, we've set up, enormous relationships, chains of relationships all the way through, the business leaders and the governments, within the states and the federal government in Mexico. So we're pretty entrenched. We're active in 8 states. We know our environment extremely well. We talk to the highest levels of government on a fairly regular basis. So, those are the kinds of things you have to do. And, now that we're entering Nevada, we'll have to duplicate those same types of strategies and build relationships.
Mm-hmm. So, Keith, while taking into consideration the current cost of production, how do you invest in creating better recovery technologies and making the mines more efficient? And can you give us some context on how far recovery rates alone have come since 2014?
Sure. The mining sector is a very, very old business, hundreds of years old. So, I guess human beings' first efforts was in mining. So, unfortunately, it's a very slow moving industry. People don't like change generally. Human beings don't like change. Well, engineers can't stand change. So, they get educated one way and they just can't think outside the box, right? Very few engineers you can actually, shake them and then get them to think another way. It does happen, but nevertheless, I put together a team of IT specialists that were given the task in 2014 to turn over every rock there was in the business to find savings. And since then, we've implemented multiple technologies throughout the business in all levels of the business, from CSR to accounting to our whole finance department. They're right into the whole exploration methodologies and right into plant operations and modernization. And out of this came a bunch of technologies that we started adopting in 2016. And since then, we've been spending money every single year, building that team up of young engineers right out of school. And these guys grew up with iPads and iPhones, and they hit this like supernaturally. And this whole new kind of phenomenon that's going on in the mining space is not just First Majestic, but it's other companies as well experience the same. Making the same kinds of investments, and it also experiences the same kind of benefits. But this is the new generation, of engineers that are going to take this industry to another level. And I think, 10 years from now, I think the mining sector is going to be a much different looking industry.
Mm-hmm. So how far have the production rates, the efficiency of getting more silver out of the ore, how far has that come since 2014, Keith?
It's actually quite phenomenal. Back in 2014, we had 5 mines operating back then, and we had 65% recovery of silver, meaning that 35% of the silver that's in the rock cannot be processed or cannot be recovered, and it gets thrown into waste. And that's a lot of silver that you're throwing away. And then silver is not as easy to recover as gold. Gold is commonly much easier. A lot of mining companies around the world suffer from similar types of recoveries. For example, when we bought this Santa Elena mine, it had 65% recoveries. Today, it's got 95% recoveries through technology that we put in place. So our global recoveries, as I said, in 2014 was 65. Today, it's last year in 2020, our total recovery globally on all mines was 88%, the highest in the company's history ever. So we think we can get it up to 95%. It's going to take more investment, more technology, more clean energy as well, which is great for the industry. And that's the objective, is to just keep pushing recovery.
Absolutely. So as we talk about the production of silver, what things have to be considered when thinking about the strategy of stockpiling some production until the price rises? You have done this before, Keith, and you were criticized for it, but obviously, covering costs and remaining profitable is a main focus of running a successful company. So what are some of the considerations around maybe holding back some of the production until the price rises?
Yeah, well, the accountants hate it because it's a volatile metal and it's sitting there on a floor somewhere, and you can never know what to price it at. And they have to readjust the balance sheet, every quarter just based on the fluctuations of the silver price, which drives it 190. So that's a problem. And then logistically, where are you going to store it? You can't keep it at the mines. So, and you don't want to keep it in dory form. So you've got to refine it into, 1,000-ounce commercial bars. And so you have to send the dory to a refinery. The refinery doesn't own the metal. All you're using the refinery for is the refining process. So you still own the silver throughout once it goes in and then out the back door. You still own these 1,000-ounce bars. What are you going to do with them? You got to find a place to store these darn things. And so it adds an element of risk to the business that, I'd probably have to hire a whole new department just to manage it, right? Because the complexities surrounding all that. It's like paying a dividend. And we get all these questions about, can you please pay a dividend in silver? Why are you going to pay a dividend in cash? And I just, can you imagine the logistical problems of paying people in little silver ingots? It'd be like craziness, right? So there's practical things and there's obviously not practical things.
Absolutely. And that was actually my next question, Keith, these kind of outside the box ideas about, holding some production back and paying a dividend in silver. Do you think you could ever, let's say, set a minimum shareholder value and then pay that dividend in silver to people that meet that requirement?
Yeah, it would be so difficult to do. As I said, we'd have to have a whole department just managing such a task. And sure, it would be nice to get an ounce of silver in the mail. I could understand it, but I don't know how much money it would cost us to pull off something like that. I'm sure it would be in the millions of dollars just to manage that part of the business. So for me, I would just say, look, take the dividend, and if you really want to own some physical silver, just go to the shop down the street and go buy some silver. It's way easier for us and probably you as well. Less aggravation.
Mm-hmm. So Keith, I appreciate being able to speak with, somebody that's running an active mining company. And I want to get some of your thoughts towards how you view working with the local government and population. I know you purchased some very sophisticated COVID testing equipment recently and helped train the local government to use it. But is there a particular strategy, as you see it, to working with them, or is it just always trying to show goodwill towards the country?
No, it's our duty because, we are the community. Mm-hmm. The first mine we bought was a mine called La Pria, and in English, the Grill. And I drove through that town in October 2003, and there was approximately 300 people that lived in that town, which no one was between the ages of probably 15 and 60. There's only grandparents and grandkids were the only people that lived in the town because there's no work in the area. So today, we built La Pria right in the middle of that town. And there's 3,000 people that live there today. And there's 2 surrounding small communities that also feed off the network that we built. So we brought in, all the electrical, the sewage treatment facilities, water infrastructure, internet, of course, electrical infrastructure. And then the town just slowly built over time. And, that community is a bustling little community with a senior school, a junior school, and all the stores you can imagine and so on. And we did that. Right? And that's us doing that. And that's the mining sector doing that on a global scale as well. And we have a symbiotic relationship, of course, because, we are the business that is supplying all the energy and manpower, the wealth to that, and the education, to that area of the country, right? Mm-hmm. So without us, if all of a sudden we're gone, all that just disintegrates. And, you see it time and time again. So, we take our relationship with the communities very seriously. It's very important.
Mm-hmm. So Keith, as you're talking about that community, does working with that town like that one provide any vulnerabilities or extra security issues for the company when you provide food, medicine, and such to the local population when those supply chains break down, as we saw during the COVID crisis?
Well, in the town of Banamichi, for example, which is the town beside one of our mines, Santa Elena mine, couldn't get food supplies because the supply chains broke down. So we stepped in with our own people and our own equipment, our trucks, and we ended up getting the food to the community. So that was the only time it ever happened, but nevertheless, it did, unfortunately. So, we do step in when necessary. and we're happy to do it. And my point earlier is, without us, there's no other infrastructure, right? So if industry leaves or if a mining company decides to leave, there's no government there to support the people. The government's not going to come to anyone's rescue, So if we didn't do what we do in these communities, so we have 4 mines right now that aren't even operating. They're shut down and they're on the sales block right now. But we're still spending millions of dollars each year in those communities just to keep those communities going.
So, Keith, what steps did you need to take to keep workers and also the local population safe during COVID?
Lots of stuff. The team down in Mexico did an exceptionally good job. It was actually quite shocking, as an outsider, looking in to see the different protocols that they were putting in place. And, they started off with tents that you had to walk through and get sprayed down before you go to work. And of course, the mask wearing and all the other, things, protective clothing and so on, was all adopted fairly quickly. But that was before we had PCR tests and all that stuff. So that came later. So once all the testing was out, then the mines were allowed to open up again, which we did in mid-June. And ever since then, we do have very rigorous standards or policies in place. You could actually get tested theoretically 3 times in a single day. So if you're an office worker, you would get tested upon arrival in the office that morning, and instant test. And then if you happen to walk over to the mill, you get tested again. And if you happen to go underground, you'd get tested again. Now, very few people obviously go through all 3 departments, but nevertheless, that could happen. So we also financed 2 laboratories, one in the state of Durango with, it's almost a genetic type machine where it does tracing, and it's for COVID analysis, obviously. We trained, and that was the Wheaton Precious Metals that assisted us in that financing of that whole lab, which is great on them. And that's being used today by the government. And we had another lab that we also installed in just outside of Hermosa.
Yeah, and it just goes to show how unexpected all these costs were. And I know, Keith, that part of your workforce is still on full salary leave because, as we know, there's not really any safety net for those workers, and that falls on your shoulders as a company to keep those workers paid. So have you made any changes to account for this?
Well, other than spending more money? Yeah, in 2021, our budget for COVID is $6 million. And that's these extra costs that the business is having to absorb. And you're right, we have about 10% of the workforce that are deemed vulnerable. We're able to get some of them back now because I've heard that parts of Mexico are going into the orange because they have color systems, yellow, orange. And it was yellow for quite some time. And now that it's dropped 1 level, we're apparently allowed to bring some of these workers back to work. So I don't know those numbers, but right now we've got over 500 people on full salary getting paid to stay at home because they've been deemed vulnerable by the government.
Yeah, that's a huge challenge that faces you guys as a company, right?
Well, because we have to go and hire 500 other people just to replace those 500. So now all of a sudden we have double the cost on those 500 people.
So, Keith, one of my last questions that I was just thinking about here as we were chatting, being one of the bigger silver producers in the world, would you ever consider, let's say, signing a contract to supply some of these industrial users directly, like a Samsung or anything like that? Or, what kind of considerations for you would go into that?
Well, one big no would be my only answer. It wouldn't make any sense because the only reason why a Samsung or someone like that is going to want to buy silver from a mining company is to have the price fixed. Because the only reason why they do it is to fix their upside or downside, right? Why else would they do it? So the miner is on the sell side of that trade. And then you've got a whole group of investors that own that miner because they want to see silver prices go up. And yet you just sold a bunch of your silver to some big industrial supplier. So now you've taken the reason away from anyone that wants to buy stock in your company. So it's a very defeating process.
Absolutely. Yeah, I think we've brought up a lot of good issues of different ways to think about this industry as a whole here that, we haven't gotten a lot of great answers to. So I thank you for that, Keith. All right, Keith. Well, thanks very much for your time today. And we'll keep an eye on First Majestic and hope to have you back in the future.
Great. Well, thanks for the time, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.